In crypto news today, President-elect Trump plans to designate cryptocurrency as a national priority, and potentially a first-day Trump order of a federal stockpile of Bitcoin. It's pretty interesting to note that global governments hold 2.6% of the supply of Bitcoin. Individuals hold the vast majority, 53.7%. This is from Bitwise. In terms of leading exchanges, Binance is leading the world, according to CryptoQuant. The difference is, in North America, Coinbase is the dominant provider, because Binance is not allowed. But everywhere else, Binance is dominating. Just in today, Coinbase to bring back Bitcoin loans with a new DeFi partnership. Senator Cynthia Lummis is on the crypto side, and has been for many years. She's just recently reached out to the chair of the FDIC, saying whistleblowers inside the FDIC are destroying crypto-related materials. And Senator Lummis says you must ensure your staff cease and desist destruction of all materials and end all retaliatory actions immediately. Senator Lummis also reached out to the US Marshal Service, who's planning to sell 69,374 seized Bitcoin. She basically says that the US Marshal Service is getting it wrong. It's sold at merely 2% of the value it could have sold at. And governmental selling of Bitcoin is likely to remain a bit of a problem in terms of lost profitability. In other news, the SEC is having a parting shot at crypto. Gary Gensler's days are numbered as chair of the SEC. And check out this, look at the actual number plate of this car, snail mail. The SEC is just trying to have a go at XRP no matter what it does. Just be aware there could be some turbulence inside XRP's price. From X, this was quite an interesting chart. You can see that China is experiencing a little bit of a problem when it comes to its 10-year government bond yields. Okay, it's time to look through the cheat sheet. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. In order to determine if clear financial skies exist or it's going to get stormy, the free cheat sheet at CTKSmethod.org is the fastest way of doing this analysis. The cheat sheet is composed of 7 rows. The first 2 rows, row 1 and row 2, measure risk. Rows 3 and row 4 measure market sentiment and global financial health. Rows 5, 6, and 7 measure the new economy, the crypto market. CTKSmethod.org service members get 32 trading view charts with structural indicators and monthly price paths for each chart of each row. Structural indicators help us to minimize fear in trading and investing. They give X-ray vision into financial charts and help you to stack probabilities like professionals do. Let's run the numbers. As professionals, we understand that we can't just look at headline figures, we have to dive into the details. Unfortunately, retail or people who are just new to financial markets, they only look at a number. If it is green, it's good. If it's red, it's bad. But things are not that simple. For example, the VIX came up. This is a green number, but it's bad because when the VIX increases, that throws risk out the window and prices go for a dive down. Therefore, we must understand what's actually occurring underneath the hood, and we can see the major market indices, row 3, all came down. Row 3 references, the futures, are also down at the current time. We had a lot of negativity inside the row 4 stocks, with the exception of MicroStrategy, but we'll look into this in more detail a little bit later on. We can see that crypto came down. Ethereum was quite hard hit, nearly 4.3% down. We saw a flow from the cryptos into stable coins, and that's reflected by market cap of USTD dominance. We also saw that Litecoin was doing quite well, and there were fairly mixed results except for the memes. And the memes are very, very good risk on or risk off indicators of risk sentiment. And inside the row 1 references, we saw a lot of green. This is not good for the markets. So we can tell it's not about just looking at the news headlines, the latest data from X/Twitter. It's about looking underneath the hood and understanding intercorrelation and interconnection. Let's get into the cheat sheet. Row 1 of the cheat sheet is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. We can see that in yesterday's session, the VIX just literally plummeted down. That caused risk-on activity inside the stock market and also crypto. This blue line is Bitcoin. You can see the VIX is currently just basing, and this little flick up in the VIX has put negative price momentum into the crypto market. We can also see that the VIX futures are starting to come up. One thing that is a really good intercorrelation and interconnection, when the 10-year yield drops down like a brick, typically risk-on assets just absolutely go for it. You can see that activity happening here. It's also inside the 2-year yield, that also happens. It's very important if you're a crypto investor or trader and you're not actually looking at the 10-year and the 2-year, you're making a huge mistake. And if you're not looking at the VIX, that's also a mistake. So you can see when the VIX drops down, the 10-year drops down, the 2-year drops down, we expect broad-based rallies across risk-on asset classes, including the stock market. Something interesting, crude oil was just going for it in the last trading session. It's since retraced literally all of those gains. The markets are very turbulent. On the news of economic data, we saw that the DXY plummeted down and then rallied up. And then it rallied up and plummeted down. Just think, price is always moving in a wave. Row 2 are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. We can see that as Bitcoin moved, so too junk bonds through a very good signal. You can think of the VIX and junk bonds inverting each other, or Bitcoin and junk bonds moving together in the same directional pattern. If you're only looking at Bitcoin and you're not looking at the 10, the 2, the VIX, junk bonds, the DXY, how on earth could you figure out where Bitcoin is going? Institutional traders and investors would never do such a thing. They look broadly. We can see that gold has been coming up, but it's starting to lose a bit of strength, a bit of momentum. Silver as well. But gold and silver and also copper are on an upward trajectory at the current time. And we can see the Aussie dollar remains under pressure. The index futures are a little bit negative towards the flat end. Row 3 is the S&P 500, the Nasdaq, the Dow, and also the Russell. These are the major stock market indices and very important to look at. When we look at the S&P 500, we can see that it's losing a potential structural one support level and it's potentially turning into resistance. I mentioned in yesterday's video that the S&P 500 was still in a downtrend. What typically happens is people see a bit of green action, they just FOMO all over the place, and they don't realize that price is moving in a wave-based function. If you think price moves in a wave, you're ahead already of 90% of people. And we can see the Nasdaq was putting a lot of weakness in, and it's just coming up to a structural support level at the current time. The Dow Jones is also weak, and this weakness that we're seeing across the S&P 500, across the Nasdaq, could continue on, so we need to be very aware of what the cheat sheet is telling us. We know that the VIX is quite low and the yields had a very substantial drop-off. If they just do a bit of mean reversion, this is going to place negative price momentum inside the market. One piece of really good news is the Russell 2000. The Russell 2000 came up to structural overhead resistance and then retraced, as did the other leading market indexes. But what we've seen is it's been held by structural support. This is why it's critical to know where your structural levels are. Typically, we look at the cheat sheet like this, just a directional momentum analysis, but you really need to see the structure. It is vitally important. You can see how much structure gives you an insight into where things are going and where they've rejected from as well. To be an institution of one, you must put in the work. Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from CTKSmethod.org. Service members get 32 trading view charts with structural indicators and monthly price paths. To gain a real-time understanding as to where risk-on or risk-off sentiment might be headed, you can look at the futures of the major market indices, such as the S&P 500 futures, the NASDAQ futures, the Dow, and the Russell futures. We can see that after a fairly good run-up, we're just consolidating with a slight degree of negative price momentum at the current time. We'll look a little bit more deeply into the S&P 500 levels just coming up soon. Looking into row 4, which is Apple, Microsoft, Tesla, and Nvidia, we can see that Apple sold down was captured by structural support, tried to get across, but was weakening as all major indices retraced. If you're into Apple, keep your eye on that 228.61 structural now resistance level. Tesla was shining in the darkness. We saw a big upsurge in Tesla's price through this structural resistance level at that 412.26 point, and it's managed to hold itself up quite well. On Microsoft, we see a big rejection of that 427.39 structural overhead resistance level. Can you imagine trying to trade or invest in Microsoft and not knowing where the sellers would come in and push the price down? We have very light structural support, and because of a negative CTKS gap, we're likely to get structural overshoot. We can see that Nvidia was weak. It didn't even get up to this 136.36 structural resistance area, and it sold down. This is why we must look at the individual charts as well as gain an overview as to market direction and momentum. The 356.45 structural support level on MicroStrategy will be one to watch if we continue to get retracements inside the market. And we saw a fairly good day with the Bitcoin miners because Bitcoin, that's that blue line, came up. But as has, Bitcoin is retracing because the S&P 500 is retracing, the NASDAQ, individual major stocks such as Nvidia, Microsoft, and Apple are all retracing. That's throwing risk-off sentiment across the crypto market as well. You could seek to look at price charts like this, but it would be very difficult to understand where they're going, where the structure is, where the ceilings are, and where the support is without the structural indicators. They are very, very valuable. Row 5 is total crypto market cap, Bitcoin, Ethereum, and MicroStrategy, which we just covered with the stocks. If we look at total crypto market cap, when the VIX was plummeting down, the US 2, the US 10, what happened to Bitcoin? It rallied. And what we've seen in the past 24 hours is a repeating of that. The yields rallied down. They plummeted, the US 10, the US 2, and the VIX. But now the VIX is starting to base and turn around, which is throwing negative price momentum into the crypto market and also the stock market. A lot of people will just start here and they'll just say, oh, I'm not even trading Bitcoin. I'm trading some random thing inside the crypto market, never understanding that Bitcoin and total crypto market cap structurally control everything. But the problem is, for Bitcoin and total crypto market cap, they're controlled by the VIX, the US 10, the US 2, the DXY, Euro, dollar, junk bonds. Hey, you name it, they're controlled by it. It's called intercorrelation and interconnection. Therefore, if you're just inside the crypto market looking at the crypto market, you're in a world of hurt. You're not being institutional inside your thinking, and you'll need to be. Because what do we see with total crypto market cap around this 3.48 trillion? We did rally from the $3.27 trillion mark all the way up on the decay of the VIX, the decay of the yields. But that's turned around a slight degree. This $3.48 trillion mark is important. It's critical to overcome. We'll look into Bitcoin structural levels in a tick, but you can see that it's just over that structural one support, turn to resistance, potentially turning to support, unless it's making a lower high. You can also see Ethereum has been incredibly weak over the past session. Now there's a structural overhead resistance level at 33.66 that you should keep your eye on. Now, how is retail going to view what's going on? They'll simply look at the 50, the 100, and 200 SMAs and say everything is good. They won't look at the VIX, they won't look at junk bonds, they won't look at the DXY or the US2 or the US10 or anything. They'll just look at these arbitrary moving averages. Please let me know in the comments, is there any issue with MAs or EMAs? In other words, moving averages, SMAs, simple ones, and exponential EMAs. Over the past 24 hours, Litecoin has been doing really well, and XRP was doing fantastically well, and of course the SEC came in and said, "Thou shall not pass." Well, maybe for the next 4 days. And we can see there's some signs of life inside Solana. Solana. Inside row 6, we look at Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. I'm just going to leave the structural levels on for you so you can get a bit of an understanding that even though Litecoin surged up ahead, it came through all of this overhead structural resistance. It's coming back to seek to convert it to support. This is a thing that we must keep our eye on. Bitcoin Cash, very similar position. When we look at Ethereum Classic, it's not looking good. Ethereum Classic is actually under a lot of structural sell levels. It's likely that smart money will seek to come in and push it down or weaken it further. For Binance Coin, around that 715 there was a level of overhead structural resistance, very light, but it was obeyed. And then we see another one at 706. 695, 696 is quite an important level of structural support. Row 7 is ADA, Solana, Dogecoin, and XRP. Let's have a look at the structural levels on XRP and see what's cooking underneath the hood. For XRP, as it was rallying along, and then unfortunately Gary Gensler fired a parting shot by his enforcement actions against Ripple. And also, we can also see, because Bitcoin was coming down, that just added fuel to the fire in terms of XRP's descent. One thing to take a bit of attention to, it looks like, for example, just at the current time, even though the trend on Bitcoin is weakening somewhat, we are getting a slight turnaround in price. If this continues up, we would expect that XRP challenged that 329.42 level. If it doesn't continue and we see Bitcoin come down, the 2003 level is very, very important. One thing that retail does, it just tends to round numbers up and look at whole numbers. Please don't do this. Use exact precision. That's exactly what the institutions do. And you are now an institution of one. It's helpful to understand that price is always moving in a wave. Look at Apple Computer, it came down 8%. No wonder the Nasdaq suffered, and it suffered hard. Nvidia also came down. When we look under the chart, it's really, really weak. But we couldn't understand that if we didn't understand how markets work. The markets yesterday looked completely different. There was a sea of green, green everywhere. People were FOMOing in. The green will continue forever. And we've just seen today that wasn't the case. What about the day before yesterday? Well, things look like this, not too crash hot. Therefore, as an investor or a trader, please do not see green and think it's going on forever, and please don't see red and think it's going on forever, ever, either. It is not. Price is just moving in a wave. If we look at the crypto market, we can see that Bitcoin has come down, XRP is up, ETH is down. But because we've gone through the cheat sheet, we understand far, far more than anybody who just looks at a heat map and tries to figure out what's going on from that stance. Retail looks at headlines, professionals look at details. Now we understand that when we look at Bitcoin, this big surge in Bitcoin's price wasn't due to factors happening inside the crypto market. It was the decay of the VIX, the US 10, the US 2. Same thing here. And also the basing action of the VIX has put negative price momentum across the crypto market. Hopefully, when you look at a price chart, you'll be able to see through that chart to all of the other charts. Ideally, you want to be able to see through a chart through to all of the other charts in the cheat sheet. Of course, we need to know where the structure is inside the specific chart that we're looking at. And Bitcoin is a very, very important chart to analyze. It runs 24 hours a day, 7 days a week. It never sleeps. Yesterday, we were looking at some fairly key values, and 99,798 was a key one. It looks as though we're getting a bit of positive price momentum, and we've just come off that 99,798 level. There is a positive CTKS gap here, so if we get follow through positive momentum, we could take out that 102,691 level. If we see continued weakness in the futures of the S&P 500, the Nasdaq, the Dow, and we see that yields are coming up, what we would anticipate is a negative price movement. And this is how you need to trade and invest. You need to look through the charts. It's a very, very professional thing to do. Now, if we get a negative price momentum inside the crypto market, we would expect this 98,384 level to be the one to watch. The primary one right now is this 99,798 level. You want to look forward to the right and see how price action is treating it. Overall, with the inauguration coming in just a few days, we anticipate positive price momentum for the entire crypto market. But we also know that Bitcoin cannot escape the stock market's gravity. As I was pointing out yesterday, the S&P 500 is still in a downtrend. It's a confirmed downtrend, and it's still in one. We haven't seen a breakout. In fact, what we saw was a little bit of a rejection. There's a degree of weakness. This candle, even though it's a little bit dirty, it's not all green, it's still done bottom side and top side candle passes, so it's pretty good. It doesn't mean it's rolling over. There is always the necessity for some degree of consolidation as we make these big up moves. If we don't get it, we tend to do something like this. So just realize that price is always moving in a wave. Some people say, oh, I should have just bought at the bottom and held on for dear life. I tell you what, when the markets start to come down, you won't be saying that at all. Let's just zoom in a little, so we'll just put the structural indicator on. I'll also put some values associated to these lines. This structure is telling us a complete story. We just bounced from that 5809 structural support level, and we bounced really hard. Why? Was it market manipulation? No, of course it wasn't. What caused this? Please let me know inside the comments. It should be absolutely obvious now what caused this spike in the S&P 500. Now, we know that structural resistance levels are very, very real, as are structural support levels. The one to watch right now is the 59.58 level. If we start to get above there, that throws positive momentum and a bullish case scenario. And you can see this positive CTKS gap. We could reach 60.15 relatively quickly. That's the positive side. That's the bullish side. The bearish side is we haven't managed to hold on to the 59.41 structural support level. We're just below it. If we start to come down, the next area that we would be caught, 59.15 and the 58.89 levels. Could we completely retrace this upward move? Yes, we could if the VIX spikes up. Why would the VIX spike up? Geopolitical concerns are mounting right across the world. It is possible. But if you're a long-term investor, that's fantastic because you want to DCA in at these structural levels or around them. Knowing the structural levels is not a nice thing, it's an essential thing, it's an absolute critical thing to know. Because if you don't know, you'll just guess. For example, what caused inside gold's price action, what caused this move up and then a retracement down? One thing that you will find, the structure will give you an incredible perspective as to when the sellers will come in and to when the buyers will support price. What we can see is we've got above the 26.98 structural once resistance, and that played out a few times. Now we've converted that into support. We're in the middle of the lower end of a positive CTKS gap, which could see gold just shooting to the 27.37 mark. There's a lot of positive momentum inside gold at the current time. That doesn't stop it retracing down to 27.06, even the 26.98. Consolidating gains is a good thing. If you don't consolidate gains and it just goes straight up the wall, it's going to come straight down the wall as well. If we get consolidations as we go around and obeying those structural levels, it is fantastic. It reinforces the current price action. Without the structural levels, it's like trying to drive your car just looking through mud. One of the things that we've talked about in previous episodes is that retail will look at recent indicative price history, and that's literally only a fraction of the available price history. And then it does so in a non-statistically significant manner. If you can imagine a windscreen absolutely covered in mud and having less than 1% visibility, you're looking at recent indicative price analysis. You can get a free version of the cheat sheet by visiting CTKSmethod.org and just scrolling down to this particular area where the cheat sheet hangs around. Also, you can download this free, and there's quite a lot of different helpers down here as well. And if you would like to see trades done with the CTKS method, here you go. There's quite a few of different videos that you can look through as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.